Hello, everyone. Today we have Chris with us, and he's gonna be telling us about VA loans and his hands on experience. So, before we get started, if you like this content or if you want to know more about these things, please follow us and subscribe, and we can get started. Chris, can you tell us a little bit about yourself?
Yeah, for sure. I'm not originally from California. I grew up in
Mm-hmm.
Wisconsin. Um, at 18, I joined the Marine Corps, spent 4 years in the Marines. Um, After that, decided to move out to California and went to school for engineering. Uh, Started at community college, went through UCLA, and then got my master's degree at Stanford, and kind of started my career there as a civil engineer. Um, After a couple of years, COVID hit, and I was just kind of getting bored of the same old, same
Yeah.
old daily stuff, and was looking for something different. Started looking into investments
Mm-hmm.
and got really into the stock market and playing around with that. But for me, it was too much of a gamble. It was playing with my emotions a lot,
Mm-hmm.
and so that's where I started looking into real estate as an
Okay.
alternative. Um,
So, how was your first experience in real estate?
so my first experience, it was during COVID
Mm-hmm.
and late 2020, and I was just tired of renting,
Mm-hmm.
and
Aren't we all, right?
right, right, and I realized, hey, I'm a veteran and I have this VA loan. I've heard of the VA loan. I didn't know too much about it. So I started, I talked to my dad, who was previously a realtor, and has invested himself. So he has a lot of information about that. Um, and, talked to other veterans and
Mm-hmm.
just learned a little bit more about it. Realized, hey, I could go purchase a property with no money down.
Yeah.
Um, and with the rates being as low as they were, that was extremely favorable time to do that. So, um, yeah, we can go more in depth, but that's kind of
Yeah.
how I got into it because I realized I didn't have any money set aside for a house. I wasn't like building a savings to go buy a house or a condo or something like that.
So let's go back like to what VA is. So a lot of people might not know what VA is. Can you tell us about what VA loans are and why are they so special compared to conventional loans?
Yeah, so I'll just talk from my experience with it. But the great thing is, as I mentioned, it's zero money down. So
Mm-hmm.
you can literally get into a deal without any down payment.
Wow.
Um, that's the big benefit. And generally, you hear people say that the rates are lower. I think they're still
Mm-hmm.
in the range of the other loan types, but maybe at the lower end
Yeah.
of those ranges. Um, One other thing with VA loans is, in my particular instance, I was able to, like, you still have all your closing costs that you would with a normal loan. But for me, I was able to basically offer the seller an extra $10,000
Mm-hmm.
in exchange for them agreeing to pay the closing costs. So literally, I came out with zero money out of pocket. It was beautiful.
And
Uh,
was it hard to obtain one? Like, what was can you walk us through like the process of
yeah,
obtaining VA loans?
Sure. Yeah. I mean, it's very similar to a typical like a conventional loan process. So most lenders will offer VA loans.
Mm-hmm.
Common misconception is that VA loans are not provided by the VA. The VA is not lending you money, right? The lender, your the mortgager or the mortgage
Yeah,
the
yeah.
mortgagee, right? The mortgagee is still the one lending you the money. Um, the difference is the VA is backing that. Essentially, I don't know if insuring is the proper term, but they're essentially insuring up
Okay,
to I think 25% of the loan amount.
okay.
And so basically, what that means is if you were to be foreclosed on, you stop making your payments, and the lender forecloses on you, and they go to auction and they can't recoup their full loan amount, the VA will back, that additional amount. So it protects the lender, and because of that, even though you don't have any down payments, they don't require. This is another huge benefit. They don't require PMI.
Okay.
which is private mortgage insurance.
Yeah, maybe we can just explain what that is. So, in terms, like sometimes some people cannot afford to even pay the down payment on normal loans, so they
Right.
would be requiring to get the PMI that he mentioned. And so, in this case, a VA loan does not, as I understood, like does not require this PMI first of all because there is no down payment,
Yeah,
right?
yeah, they don't require PMI. So, you know, like if you were to go get like an FHA loan, yes, you could pay as low as 3.5%.
Yeah.
However, in that case, you're going to be paying mortgage insurance, and I think the FHA has certain requirements, and you know, and then if you go like the conventional route and say you pay 5% down, you know, you're still going to pay mortgage insurance at least until you get to 20% equity.
So, what are other like criteria that are required to get this VA loan?
Yeah, I mean, again, just speaking from my experience, it's
Yeah.
mainly uh, meant for veterans. I think they probably have options for families of veterans, especially you know those who lost their veteran in service. And but you know the main thing is that you have that association meet that requirement, and then you know they still are going to have income like debt to income ratio requirements, minimum credit score, all that stuff, all the same things that you would have to do. A lender would look at if you're getting a conventional loan.
Yeah, so we still have the, like, let's say some of the standard criteria. Again, here the difference is you should have been in service, I guess, like should have been in service or just got out
Yeah.
of service recently to be able to get the VA loan,
Right.
right?
Yeah.
And how fast did you get like approved for it?
Yeah, it was, I mean, my total closing process from start to finish was about 30 days.
Okay.
So it's pretty typical of a closing. I mean, I've seen conventional loans take longer than that, so
Yeah.
it wasn't any slower. I know the VA has their own approved, I guess, appraisers that have to do the appraisal, and they have their method of doing that, kind of like the FHA does as well.
Yeah.
And so, you know, they can be a little more strict with that. I think that's a benefit because that way you're not overpaying for your property, right?
Yeah, it's a good thing. Like you're guaranteeing, like you know what you're buying, and you know it's for the right price, right?
Right.
Okay.
Yeah.
So, like, so you said that it took like 30 days. So after that, how does it go? So how do you make the payments? It's the same as like how do you go on with the payments from there on?
Yeah, they the way mine was set up, at least they combine the mortgage payment, which is principal and insurance, with your taxes and principal and interest with your taxes and insurance in an escrow account. So yeah, so it's pretty standard. Like mine was a 30-year loan, just like conventional loans would typically be.
And what was the amount like you were able to secure? And
oh yeah, so my property was 330,000. And so again, they had it listed for 320. I offered 330 in exchange for the seller paying the closing costs, which almost worked out perfectly to be $10,000. I think the lender, he helped me figure out what that would be.
Okay.
Worked with me on that. But then the one snag is that now it has to appraise for 330. So that was kind of the only question. You know, if it only appraised for 320, then we'd have a decision. Either we have to reduce the purchase price, or I have to come with the closing costs and kind of modify it.
It's pretty straightforward as I see. And did you get your property in state or out of state? We're in California, so out of California? Or?
Yeah, this one was in California.
Okay.
So the VA does require that you live in the home as a primary residence. And you know, for how long is kind of, there's not hard and fast rules with that. Most lenders will say 1 year minimum that you have to live there as your primary. I've heard some other lenders be okay with 6 months. So it really depends on the lender. and how they interpret the VA rules. Because ultimately the VA is protecting the lender, you know, and so it's really up to the lender and what they feel is acceptable for their risk level. One thing too that I didn't really mention because I didn't have to deal with this, but there is, I think they call it like a VA funding fee, I believe is what it's called.
Yeah, tell us more about this. What's that?
Yeah, so the reason I didn't have to deal with it is because I have a disability rating through the VA system.
Yeah.
Just for, you know, my time in service. And so if you have a disability rating, I believe it's just 10% or higher, then they would waive that funding fee. If you don't, then that's something you have to pay. And I'm not sure how much that is. I think it's a pretty decent amount, but doesn't make the VA loan less favorable, you know, than like an FHA. So
okay. So I heard the other day that you were mentioning, we were talking, and you mentioned about something about getting multiple VA loans. Can you tell us more about this? I didn't know that you can get more than one VA loan.
Right. Yeah, and I didn't really know either. And again, like a lot of people think they understand like the whole process, and then I start talking, and I'm like, it's not really how it works, right?
The more you know, the more you know how much you don't know, right?
Yeah, right. And so, you know, I started just by, you know, I talked to a few people and like, okay, so you can have a second VA loan. So I started kind of just Googling, well, what does that mean? What are the rules with that? And then I started talking to lenders to get more clarity on that answer. And so what I found is essentially with your first VA loan, there's really not a limit or a cap on how much the VA will, you know, quote back for the loan amount. So your first property, like whatever, as long as it appraises for the value that you're offering, you can use a VA loan for that first purchase. Now, if you want to use a second VA loan, this would be after that year of living there as your primary residence, right, for your first property. But say you wanted to go buy another property and rent out the first one, then they'll look at what they call your VA entitlement, and that varies by state, and maybe even by locality within the state.
Yeah.
Where I'm at in California, home prices are very high compared to the rest of the country. So the VA entitlement amount is very high here compared to most other states. It's something like 1.2 million or 1.3 million. And so, you know, for my case, they would look at it and say, oh, okay, we lent you 330,000, right? And let's just say, you know, it was 1.2 million, then, you know, essentially it's just under 900,000, you'd still have left as your entire VA entitlement.
Okay.
So now that means, okay, I can go purchase another property and get a loan amount of, you know, roughly.
Yeah, so as long as you don't cross the entitlement, right, the amount, you can get maybe 3 or even 4 loans, right? If it's okay, wow.
Yeah, you could. So like you can go get a second one, and here's the other thing that was explained to me is, you know, say I had like 400,000 of entitlement, and you know, I went and bought a place for 500,000.
Yeah.
And so the difference, the 100,000, you can still get a VA loan, but they'll only back the first 400,000. So the next 100,000, you have to come up with 20% on that amount, but it's not on the full purchase price.
Wow.
And so you still might be able to do it's sort of like a hybrid, I would say, in a way. It's still a VA loan, but you have some down payment you're responsible for.
So what would you advise other veterans right now who are interested in buying a house or want to do anything with real estate? What would you tell them?
Well, I mean, this is my opinion. I'm very biased because I have gotten heavily into real estate investing, and that's kind of my long-term, even not so long-term, you know, retirement plan. But you know, if you're a veteran and you qualify for a VA loan, and you're renting, I would say look into, you know, what your payments would be if you went out and purchased a place, and if you can make that work, even if that means eating rice and beans for a while, right?
I hope it doesn't get into that,
You know,
but yeah.
I would do it.
Yeah.
Look, you can look at interest rates. You can play that game. You can look at, oh, where are the home prices going? Oh, I think the market's going to crash. You can play that game. If you're buying your long-term home, a place you're going to live in, why would you care if the market crashes?
True.
You're not going to be selling your property, so right.
That's very
I mean,
valid advice, yeah.
and just because no matter what's happening with the market, there's always going to be somebody telling you the market's going to crash. Don't buy now. Wait. And then you wait a year and the market went up. Now somebody else is telling you don't buy. Now it's really gonna crash, and then it goes up.
Yeah.
So it's like I don't play that game. You know, if you can afford it as your home, and we're not even talking about investments,
Yeah.
just as your home, then do it. And now if your long-term play is an investment, especially a long-term, like a buy and hold, you know, rental property, and your plan is to go buy, say you want to buy a fourplex with a VA loan, and you want to live in one unit, rent out the other three. It's called house hacking. Okay, so you can go do this with the VA loan, and then after your year, if you have enough entitlement in there, you can go do it again.
Yeah.
And buy a second.
Yeah.
And you know, when you gain enough equity in that first property, you can always refinance out of it, and now you just freed up all this entitlement, and you can go do it again. So you can continue to do this, and a lot of people build, you know, at least start building their portfolio that way as well. So if you get in right now, right, it gets the ball rolling.
The best time
Gives
to
you
invest
options.
was yesterday, right?
Yeah,
They
like
always
when's the
say.
best time to plant a tree? 20 years ago,
Yeah,
right?
yeah,
When's
true.
the second time? Today.
Right now, yeah. So what are some of the misconceptions, maybe you would say, like anything that comes to your mind about VA loans or the process, anything?
Yeah, I don't know if they're common misconceptions. I mean, the biggest misconception that I kind of mentioned earlier is that people think it's the VA who's lending you the money, which is not the case. It's still the lender who's lending you the money, and
I see.
you know, so I had another friend actually from the military who's going through this process right now. He's looking to buy a home in Texas, and he had all sorts of questions, and he was really worried that, like, you know, he's gonna get ripped off. Somebody's gonna rip him off and stuff. And
Can you actually tell us more about these things, like these common maybe fears or
yeah, I mean,
why
the
people
big
hesitate
thing
to?
yeah, like the big thing that I told him, and right, I mean, there's of course there's bad actors out there, right? That's something you always got to look out for.
Yeah.
I would say, like, if you're a first-time home buyer, you want to make sure you have a good realtor on your side, because their responsibility is to look out for your best interests. They have a fiduciary responsibility to do that. And if you don't feel like that, whoever your realtor is fulfilling that, you totally have the right to go find another realtor. Especially if, you know, it's a big deal. It's a big decision. It's a big purchase. If you feel like their main goal is just to you know, you're just dollars and cents to
The
them,
commission,
the commission,
yeah.
then scrap them. There's
Yeah.
no offense, realtors are
No,
dime a dozen,
I
right?
understand. This is why I
Yeah.
got into real estate,
Yeah.
because my agent tried to do the same
Yeah.
to me the first
And,
time
like,
buying a house.
I mean, I had one realtor on Facebook. Now all of a sudden, you know, 80% of the friend requests that they recommend are realtors. So like there's so many out there. So just, you know, talk to your friends and family. See, you know, actually, if you have investor friends, they're the best people to talk to about who's a good realtor, because they've done many deals. So they know, oh, this guy's really good. I've worked with him so many times. Usually friends and family, it's like maybe they worked with him once.
Yeah.
And they didn't feel like they got screwed over. So, hey,
Yeah.
seems like a good realtor.
Maybe they don't know it, but
Right.
because it was only one time, right?
Yeah. And so that's the big thing I would say, because again, if you're just buying your long-term dream home, you know, and it might be the only purchase you ever make, then you're not going to probably need to go learn every little, you know, intricacy of the whole closing process. That's why you have a realtor.
Yeah.
So that's the big thing. And then they're going to recommend a lender to you as well. Again, you can talk to investors. You can ask, hey, who'd you go through? What's your experience been? But the long and the short is, whoever is there, like the lender is there, they want to build their business.
Yeah.
And if they're a good lender, they're going to take care of you. They're going to treat you the same as anybody else. The other thing to consider, right, is there's like, there's fair housing laws. There's, I don't know the proper term, but I mean, there's all sorts of laws around how lenders lend to, especially retail buyers, because the government wants to protect the retail buyer because of this idea that it's a very complex process and most people aren't expected to know the whole thing. And so, they're required to abide by those rules, those laws. And so there's a lot of protections in place for you as well. I don't think if somebody's job and their business is to lend money to people to buy homes, it would be a pretty horrible practice or scheme, if your plan is to just go rip off everybody you're trying to work with, right? That's not a very sustainable business.
No, not at all, not at all. So, would you like to add anything before we close this podcast? Any final remarks? Any final things that you'd like to say and share?
Well, the main thing I would say is, look, I'm an investor.
Yeah.
Right, and so
how many like properties did you invest in so far?
I have 6 properties, and 8. So 2 of them are duplexes, so 8 units. My goal this year is to add another 22 units to that, which some people might raise eyebrows. Whoa, 8, and then you're gonna add 22. Here's the thing: 22 could be one deal, right? That could be one apartment complex of 22 units. It could be a 12 unit and a 10 unit, right? It could be 3 8 units. So it's not necessarily like I'm buying 22 properties. And that's the beautiful thing with it. The other thing to say with that is, I'm mostly going to be leveraging private investor funds, meaning I'm not using much of my own capital, right? And so there's all sorts of creative ways to do that. And so this is why I love real estate, because you can leverage, obviously you can leverage the bank's funds, you can leverage private investors to kind of fill the gap. They call it gap funding, right? Fill in the gap of the down payment amount. You can partner with people, you can do all sorts of creative things. And, aside from just the appreciation you get on a property, the price going up over time, of course, if you're renting it, you get tenants that are paying down the mortgage. They're paying the mortgage for you, right?
I think what you're trying to say here is, why use your own money if you can use somebody else's, right?
Which is, the VA loan. System, that's how I got into it. I did use a second VA loan. And I guess one other thing that I've used that was really helpful, and this is for veterans especially, you get in your first property with a VA loan. I mean, you guys steal my idea. Like, do what I did. It's not rocket science. It's like you get in with your VA loan. Hey, the price went up. Oh, look, my home appreciated so much. Now you have what they call equity. So you can take that equity out of the property and you can go buy other properties or invest in stocks, like whatever you need to do with it. And so if you're a veteran, really anybody can get what they call a home equity line of credit. It's essentially, it's similar to like a credit card, but the interest rate's a lot lower. It's not 20s, in the 20% percentage points. And if you're a veteran, you can go through like Navy Federal, is who I went through. They will lend up to 95% loan to value.
Wow.
So
this is a serious amount,
So you have 20% equity in your property. You can 15% of that. You can take that out. And you can, with the line of credit, you can use it over and over and over again. Wow. And so it's really beautiful. So that's how, I had my first property. I got they call it a HELOC. So I took out a HELOC, and you can write checks with it. So I use that as a down payment on my first duplex, and got in. That's been a great performing property, and then I use it all the time, and just for typical expenses.
So you're saying financing has no limits here when it comes to creativity of financing. You have no limits, almost like there's always a way to.
There's always a way to finance it, right? If you're an investor, like there's always, if you're an investor and you have a good deal, there's always somebody willing to lend on that deal. Okay. If it's a good enough deal, an enticing offer, then you just got to go out and talk to people and show them your deal.
Yeah, I see. It's like your business plan, right?
Exactly.
Like you're telling that,
Yeah. Because real estate's a business. Real estate investing
That's
is
correct.
actually absolutely a business. One thing with that, I mean, just kind of to keep in mind, like with conventional loans and VA loans, all that stuff, typically there's a maximum. You can only have up to, I think, 10 total loans. And so as an investor, that's, the conventional loans are typically going to be cheaper in terms of interest rate than like a commercial loan, or if you go get, they call it a DSCR loan.
Yeah, unusual, like they're not conventional. It's unconventional loans.
Those are higher interest rates. So a lot of investors will go exhaust their 10 conventional loans first.
Yeah.
And then switch over to DSCR. Or the other game you can play is like, it's 10 loans, but they could be 10 loans at 100,000 or 10 loans at 500,000.
Yeah.
Right. So if you've got a investment property for 100,000, then just use a commercial loan.
Yeah.
Don't waste your golden, your gem conventional loan on that.
Yeah. So I think that's it, Chris. Thank you very much for your time. This was very insightful, I would say. Again, guys, this is not legal or financial advice. We have to mention this. And please, again, if you like this content, please subscribe to our channels. If you have any questions, drop them down in the comments. And we'll see you in another podcast.